Hey there, everyone. Welcome to this week's edition of Bulls versus Bears, episode 122. Look, obviously they're very confusing title pages now, but the young'uns told us that we had to have better thumbnails. So the 10-week streak starts to wobble, but what we are going to talk about for those of you loyal listeners, who know about the SaaSpocalypse. Well, we're going to talk about the SaaScension of software stocks, or the SaaSerection, or the
I like the one that I liked was the SaaStacular.
The SaaStacular, but it was a pretty boring old week because that was the funnest thing I did on Twitter. But yeah, we had a little bit of vintage come back this, and when I say vintage, I mean the Dow, which is the dumbest index in the world, but we still have it because of I don't know, nostalgia. But it and the Russell rallied last night, and tech was down, so it was like up 1.5% each in the small caps in the Dow, and down 0.5% in the NASDAQ. So there's been a little bit of profit taking, but as you can see, like Micron's in the bottom corner there. Congrats to Micron becoming part of the $1 trillion club. I mean, Dell was up 33%. So SanDisk was up a good 10, or so when I say they pull back and gone into the Dow, kind of like when JT and I talked about the Widowmaker, the SPY versus the S&P, it doesn't happen for very long. So, but yeah, I don't know what was going on with Amazon. I don't know. Does anyone hear if there was a story there? It seems a bit odd that they got
hit. Is it caused by Deep Blue? Blue Origins, not Deep Blue. Blue Origins.
Oh yeah, of course.
Yeah, forgot about Bezos and Amazon.
Yes.
And I will say, just on Micron. So we had it in the global alpha. Our original entry was about 419, and our initial profit target, I just looked back at the rec, was 550. And
when you say profit target though, it's more of a that's where we would consider taking it off.
No, but just saying, that's when you put a trade on, you're like, okay, well, you use your usual 1 to 2 risk to reward ratios. So that's where the 550 came from. And then it just hit, I think 1,080 was the high last night or 2 nights ago. But we've taken the second half off at 10.50. So yeah, amazing move on a company that wasn't very small when we put the trade on. It was probably about a 350 billion market cap and hit $1 trillion. Amazing stuff.
Yeah, and forward, some numbers suggest that forward PE could be single digits.
What?
So yeah. No, because they're and memory's traditionally boom or bust, but everyone needs it and they need it now. So they're just going. They're not being fair. They're just going. So your place in the queue depends on how much you want to pay. Purely. So if you've been waiting for a year for it, if someone comes in and goes, I'll pay a double, triple, quadruple, you just get bumped. So it's got this bidding war going on. And apparently Samsung employees are blown up because the memory shortage has caused Samsung stocks to go nuts to the upside. But about 4 or 5 years ago, it was a story I was listening to, and they being good, Samsung's, what is it, is Korean, right? But they're similar austerity sort of, take a hit for the team. There's the Japanese, I guess, but the memory, like the Samsung memory was going out of business. So the whole staff all agreed for the sake of the company, they'd take a 10% pay cut. And that's what kept it alive. And apparently now they're looking at going on strike, going, well, hang on, we took the downside.
Where's our upside? Yeah.
Pony up, mofos. And they want stock options. and it's which is apparently not, it's not very, it's not very like them, and it's caused a bit of, but like fair enough. I mean, in America, they just wouldn't have taken the pay cut, but and then demanded the stock options, but it
they would have just let the company burn and be like, okay, we'll just move on to the next one,
and then just reopened on its burning ashes. And Chapter 11, that's someone else's problem. That's pretty much how Trump's first 6 casinos went. I think Chapter 11 is a pretty big loophole, I think. But I've got to say, it wasn't like mad interesting week in terms of, the software kind of did run out of steam a little bit, and there was some profit taking. But I've said that before, and it's kept going. Like CrowdStrike and Palo Alto at one stage have been up 90% since we recommended them. And there's patchiness in the software sector, like in recovery. So some are going and some aren't, and that's where the man on the bottom of your screen, K.AI, is going to probably fill us all in later on, because our software webinar, Software Survivors webinar, was very popular. I was effectively just asked Kai questions. I'm not going to hide it. He's the man. So and we're going to do a sequel because quite a few of the trades have gone awesomely, and we want to do a humble brag, but B, because it's really interesting how things have developed and which sectors now, because that Anthropic thing dropped and everyone's like, oh well, we're going to need more cybersecurity, and it's gone back up, and it's just going to be interesting to see which subsector gets the next the next tailwind, because as we all know, a tailwind in the US is like 90 to 100%, not like here where it's like
it's like 9%. Yeah,
9%, and then 2 days later we're back at the bid. This is the Aussie market. Well, there you go. Software stocks in just above Telstra there, in the bottom, towards the bottom right, all looking pretty awesome. And just quietly, like they should, because they're basically, apart from Technology One and Pro Medicus, the rest of them aren't pulling their weight. So they need to wake up to themselves. I think ResMed was down because of some, everyone hates the healthcare sector, but I think there was some progress in the GLP oral tablets this week. I don't know. Anyone else is there any other news really you guys that spotted this week that was, Megaport. We kind of been saying that, when's Megaport gonna, they literally, everyone's gonna want AI. They're gonna be the guys to install it, and then everyone's going nah, and then boom, 40% or something. And
it's done
it does everything in one day, and then it does nothing.
Yeah, well, it's done a 3-bagger off the lows. Like, it was at $7, and I think it crossed 21 yesterday. Last I looked, but yeah, absolutely amazing move. Like, and pretty rare to see that happen in an Australian stock. So nice to see. It can happen.
Well, it just goes to show how thin this market must be, because we've been we've just been confused by the fact that it hasn't gone up, because we bought that. We caught the falling anvil tied to a knife, and and I think I know that the $7 mark's very familiar, because I'm pretty sure me and you were sitting around one day going, "Oh God, are we going to have to sell these?" It was like, because it was a recommendation, and when it got absolutely trolleyed.
But it's interesting direction that they're taking, because what they're doing with that cap raise is basically they're going to put on GPUs as a service. So you get a lot of these big hosting sites or infrastructure guys who actually do this, like DigitalOcean. There's a ton of them in the US that do this. But it's interesting, like, because we were talking about this the other day, where like, would you host your own language model? I don't know. Like, I mean, I think we're past that stage, aren't we? Like, I feel like it's moved on to agents, so it's like training your own language model when they're all so good. I don't know. Yeah, like it's interesting to see how much usage there will be. Maybe it's more geared towards enterprises as opposed to just one person users, or the consumers. I think it's probably more geared towards enterprise. But yeah, it's an interesting play.
What everyone's realizing is that unless you can control it, it's kind of, from an enterprise level, it's useless. Like we have this issue all the time. Like Claude is amazing, and then we go, "Oh, can you tidy up this document for us?" And then all of a sudden, JT's got 2 heads. Kai looks like he's from Jamaica, and then the chart's upside down. You're kind of like, "What the hell happened there?" Like it does something so brilliantly, and then it's just so ridiculously stupid at others. And these boys, just a little bit of insider knowledge into MPC, in that period where I was potentially helping Anthropic's valuation, running 2 systems, running session limits 3 times a day. It was great for building in-house dashboards and things like that. But it was, and I got projects to a point, and I'm like, yes, I'm never going to have to do this work again. And then they brought out a co-work update, and then not all of my projects, but quite a few of my projects just went, and they were gone. And I had to almost start again. So this thing's nowhere near perfect. And so I kind of get where you're gonna. I don't think if you're a large enterprise, you can't run a big. You might have to have your own trained model on your stuff only.
Yeah. And there are a lot of enterprises that want to sort of do that. They want to ring fence their own data, which is pretty much their IP, and not let the public see as well. So,
but I think also what we talked about last time as well, right? I think this is inherent to large language models, right? Because it's not designed to be a deterministic outcome. And what that means is if you put in something, it always gives out the same result. Large language models don't do that, right? Because what's happening behind the scene is it's a probabilistic model. So basically it means it's variable outcomes, right? It'll try to do the best that it can to produce a kind of, to make a prediction. But the results will always vary in some ways. So it's interesting, and I think it's inherent to large language models, regardless of how much improves. But obviously it will get better. But having that, I think it will always have some weird aspects of it where you can't really control it very, very well, right? So
interesting.
That's my take.
And just on AI, so I had a client that asked about a company on the ASX called DAI. That's the ticker code, and it was Decider AI. And I actually showed.
You sure it's not Kai's brother Daniel?
Dan AI. But the point is, I showed Finn the investor presentation, and it read just like a crypto, with a hype coin. And I just,
oh no,
it was like, we run the orchestration layer for the agentic economy, and I just went, okay, this is gonna be entertaining. So if you want to have a laugh, I might bring it on for next week's show because Finn will be on. But it's amazing corporate speak, and it's worth a mention.
That's actually not a bad idea for an episode, because I was reading this whole article. Remember about SpaceX? And then someone was talking about they've got a theory that a picture and a words to and financial data ratio in an IPO, and this guy is going it's picture to actual credible figures ratio. This is and he's got this whole scale, and it's if there's too many, and then it made me think of the Myer IPO in Australia, where private equity bought Grace Brothers or whatever it was, or Myer, and then literally it was almost like a smut magazine with Jennifer Hawkins wearing Myer stuff, and then there was one where it was a barcode at the back to get your financials, and they sold it, and the price just went like that straight away, because everyone was just too busy ogling at Jennifer Hawkins. And so I reckon that's not a maybe we'll have a bullshit detector episode, IPO bullshit detector, depending on how SpaceX goes. So if SpaceX goes through the roof,
we didn't do anything.
Other things, but I think and I remember that Megaport day as well. The earnings result had this big rocket on the front. I remember my heart sank, and I'm like, oh, it's not going to be good. And that was, and it got belted 30% on the day, which wasn't funny at the time, but in hindsight's wonderful. But yeah. Oh, and we're not just going to talk crap this week. Jonathan and Kai genuinely have. Kai will get to it. He will get to the software, but which will be a teaser, because you'll all have to watch the webinar. But
okay, so I'll
strategy.
Okay, so I was on Ausbiz today, and I saw the list. So I was asked last minute as well, and I just looked at the list and I said, "Oh boy, how am I gonna, rather than just crap on all these stocks, I'm like, how am I gonna actually add some value
turds here? You can polish."
Exactly right. So I was like, hang on, because I've been trading options a long time, and let's go to stock repair strategy. Now, the best, I know it's options and it could be quite complex, but I always have it as an analogy that stocks are pretty much a game of checkers. It's a very simple game. Options is chess. So there's a bit of added nuance, complexity. But the thing is, it's not an impossible thing to learn either. Okay. So best thing about the stock repair strategy, it's kind of like averaging in, but you don't have to put extra money in. So if you already own the stock, you can actually just, do this maybe 4 times a year, get maybe 3%, 4% each time that you do it, and it just brings your average down. So just for the technically minded, let's just say where's seed sell now? About $100. Okay, you're long at 120. You buy a $100 call, okay, and you sell say $220 calls to fund it, okay. And if you can get that for a credit, it just means that you didn't have to put money in, or even at neutral, and there's no margin call either. So it just means that it brings your average down, but then if it bounces from there as well, you'll get an extra uplift as well. You would have made more money than just holding the stock itself. So just something that I put it out there. I actually tried to chat about it today on the call, and the Dan just said, "Oh, yeah, that's probably too complex for it now, but let's
I'm
talk
surprised
about that."
They didn't cut the technical difficulties, but because it's pretty hard to get people to listen when it comes to options. And we obviously do a lot of structured investments, and I've genuinely tried over 1,000 times to explain options and even basic options to most people, and I can see the moment where the light just dims in
exactly.
their eyes.
Yeah, it's just.
But there are some really good simple strategies, and I'd never heard of this before. It makes sense to me, but I think I said to JT, mate, for those of you who want to concentrate for more than 3 seconds, and this is not that hard. If you actually work it out, and yeah, JT will be a little bit more comprehensive on it. But and if there's any further interest, because people go, oh, I've heard about options, and then you go, well, there's this thing called a call, and then they're like,
exactly right.
So,
well, that's where I found I learned about structured products probably 10 years ago now. But yeah, I was like, this is actually genius, because it is options trading in general, but it's just remarketed and just put in more simple language. And I was just like, wow, this is actually the way to go.
If you read our marketing to even simpler language.
Yeah, exactly right. But the key is that you just have rather than just waiting there for a stock to do something, you can actually, there's other strategies out there that just give you more options, and you don't have to know all the fundamentals behind it and the complexity. But yeah, it's just a fairly simple strategy. Well, it's not simple, but once you get your head around it, it's kind of like playing chess. You play a few times, you might get beaten, but then it's not rocket surgery basically either.
We should probably do a options for dummy course. Just a real simple explainer, because I found this.
Yeah, there's some of the basic stuff's complete. If you explain, everyone would be like, oh, is that it? It's not that bad.
It's not like that. Yeah, it's not that bad. So yeah,
I'm going to bow out of that one, because out of the three of us, I have the least amount of options knowledge.
Oh no, I actually wrote a basic intro to options course, and I actually presented it a few times, and people are like, oh, Is that what you're always trying? Oh yeah, that's actually it. So I gotta. Hopefully, it's not in an older laptop, but it's still on my. I've still got a laptop that's 7-8 years old, so hopefully it's still on that, and I'll dig it up.
Fair enough. I mean, mind you, there's a lot of those scam courses out there, and they charge like 15 grand for a weekend, and all they do is sell volatility to take premium, and which is great for about 10 years, and then you bankrupt yourself on the 10th year and and 15th day. Like, so these are, we promise that there'll be normal strategies. Because I think that kind of library, like I said, people are really interested in structured products and want to understand more about it. But having a defined result is a really good thing. But look, if you're going to get into them,
it's really funny. I think it's really funny because there's two ends of the spectrum on the option space, right? Like you have basically university courses where it's just like it's so technical, but it's like it has no real world applications. Whereas you have the other side, which is like basically gurus trying to teach these option courses, and it's like it's neither. It's like it's just a tool, like it's just like any other instrument. But you need to know how to use it, how to invest it, and I think that might be useful where it's just kind of like we explain how it's used. It's not the magic formula.
You still got to have good trade ideas and good stock picks. Like, yeah, I just don't like this whole everyone's got a magic formula thing. Is like it's starting to really annoy me.
But don't we have a magic formula?
No, we've got a modern wealth formula, mate. Modern isn't magic.
That's it.
And I feel a responsibility right now to say, some form of disclaimer that our strategies do not involve magic, and past performance is not a future indicator. But it's a general non-magic advice warning.
No. I think it's well the wealth strategy basically it's just a structure, right? Like it's not saying you'll get X result for sure. You know what I mean? So it's not going to be like, oh, I promise you 10% returns a year. Like that's not what it's trying to do. It's just saying like if we get 10% in an ETF, we can do it better. And that's all. Yeah. That's all it is, right? So.
Well, yeah, we're literally using the strategy that everyone's used since like I think the first listed investment trust, because I did this history of investing, was like 1774. And I'm like, no way. And
it was trading below NTA back then.
No, well, I don't know. It was some Dutch bloke, I think. But I was genuinely surprised that there was like like they're basically like their popular pension, and then like obviously now it wasn't an LIC. It was because it is on my thing here. And then mutual funds came into in 1924. LICs were 1928. Index funds started in the 70s, and then ETFs sort of started in 1993, and then like then there was smart beta and ESG that didn't go overly well, but but structured investments is like massively growing in the US. Like in the US, it's like 10% of portfolios. Germany's got a massive uptake. The Germans just must love their structure. They do love their structure, but it's growing everywhere else in the world. And we're going, oh, we're still buying the same index. It's just we'll just do it with heaps less capital. Oh, what are we going to do with that other capital? Oh, well, we do this other really good, fixed income thing that which is basically selling puts, which has historically been a very good strategy, and taking yield out of it. But it's not reinventing the wheel, but it's certainly putting on those those sparkly spokes and a bit of some new tires though, and just using better tools to do the same thing. Like it's not and we just can't work it out, and no one else is woken up to it. But anyway, Kai, by the way, mate, you were bullish last week, so you lost. So JT and I are back, and which
I'm not back.
which brings in a new rule. If you don't submit your pick before the show and you're not on the show, we literally just get to stitch you up. So,
Well, it's like footy tipping. If you miss your tip, you get 0.
Yeah, actually, no, I thought I was actually being really unfair, but now I think about it, I think I'm being very fair. But look at this, 0.06%.
Oh my God!
Like that is, that's tight.
Yeah.
But and so JT and I, who actually did pick bearish, and we mentioned on the show last week, Kite is going to get whatever he gets. And you were both bullish and bearish. But I mean, we've got to catch you somehow, yet, mate. Like, you were streaked ahead. So just for the record, I'm not going to be on the show next week. I'm bearish. And so, it's already in.
I'll chat commodities. I think the most interesting one is coal. So I've noticed New Hope, Whitehaven, all the coal names here in Australia are ticking near highs. So I think a lot of the energy analysts that I listen to, talking about a shortage of oil coming out. Like they've had to keep pushing their crisis hitting further and further back, but apparently a lot of the strategic petroleum reserves have been been well used now, and they're getting to crucial levels. And you can see, like, if coal's being bought up in here, winter is coming. Basically, the countries that are out there are just shoring up their energy supplies. And the main one to worry about is Bitcoin. So Bitcoin has been a good risk on, risk off indicator, and that's back down past new lows for the year as well. So quite concerning for Bitcoin. And obviously we need to thank we've got to thank Michael Saylor for coming out with that. Look, when Bitcoin was at nearly 82 thereabouts and looking quite strong, he said, oh yeah, I'll just sell some Bitcoin to pay some divvies. And I just said, what? You're the guy that says never ever sell, and here you are selling, announcing that I could sell some to pay some divvies for my company. I just went, and obviously the market didn't like that.
No, that may
not be the only thing that
went from hero to villain very, very fast.
Yeah, so it may not be the only reason that Bitcoin sold off, but obviously it's not helping when your high priest of Bitcoin is saying those things.
Yeah, that'd be like the Pope going, I might just I'm going to take a couple of days off the 10 Commandments. Go nuts. But one thing I will say, coal never pulled back like oil did. Mm-hmm. So having a look at the chart now, because I do that morning, I have to type, like, coal's the only one that's difficult to get a price on for those bar charts. So I've literally got to type the coal price in every morning. It's the only one I've got to get manually. And I've just noticed it hasn't really gone backwards, but it's basically hovering at it pulled back. The end of the pullback was mid 2023 when it went stupid to $440. But this is like 160 is the high since that period, and I got there a couple of times. But there hasn't really been any pullback in that, and it's a horrible chart because it's like they're really liquid futures. Mm-hmm. But they're like, it's really difficult. Some of these come like it's like there's no iron ore price really, like it's because most of it gets dealt in an OTC contract, like, and they're doing it's big buyers with big sellers. It's not like tiny little liquid things all the time, but it's been resilient. It's been heaps more resilient than crude. Crude's been all over the shop. But there's been a couple. Well, Chevron came out this week. You said JT, and then Goldman's came out this week about saying about those reserves. Mm-hmm. So but Trump just keeps distracting people. So
that's true. Yeah. Well, they've got the deal, but I remember the headline. And Iran's agreed not to have nuclear or nuclear enrichment. but they can change their mind. And I just went, what kind of headline is that? Like that?
Yeah,
that's just embarrassing to actually print that. Yeah.
And I get little like widget notes so I make sure I don't miss anything in the morning call. And every day for 50 days straight, Trump says that we're close to a deal. Iran says they're not close to a deal. Is literally a bullet point nearly every day. So, but you know, he's like, look over here, it's working well. Until we got payrolls tonight. Expecting 4.3 unemployment rate, which is mainly because he doesn't let anyone migrate to the country anymore.
Are we still getting positive numbers? Like, are they still creating jobs?
I
haven't looked at. Okay, let's have a look.
They got 70 or something last one. And I remember those migration numbers that you mentioned a year or so ago, where you're saying like the 100 to 120 is the baseline but yeah, those migrants aren't being let in, and obviously there's been people getting kicked out. So that unemployment rate's apparently has been held artificially low by the lack of migration, which I suppose was the point. It was like, you know, jobs for Americans. But PCE was quite strong this week. Every time you say the word PCE, you've got to say the Fed's preferred gauge of inflation. But everyone's starting to get a little bit worried about, you know, what Kai was talking about at the start of the Iran war, which is inflation. So, and I agree, but for slightly different reasons, because I think it. I mean, obviously it sends bond yields high because people need more because they don't want to have their return eroded by inflation. But I think it heavily damages the consumers, and you've seen a couple of the consumer discretionary stocks in the US get belted because no one's got the Nero after they fill up at the Bowser. And I just had that experience today. It was a 120-litre tank in my car. I nearly had to ring Kai for an advance. It was about 110 litres of diesel. Ugh. I might not be driving for a while. So software, Kai, you did a much better updated version of mine, which, you know, I'm very pleased you did. But it was so just another insight. I'm a junior developer now. Kai's obviously the senior developer. So the reason being is that I would get something that looked like a Picasso or some sort of cubist painting mess like this, and I'd be like, "Kai, can you fix this? I'm sure the data's right." And then we have this. So these are the picks. So this is the update on the picks. So, and I did a spreadsheet. The ones that we said were beneficiaries are actually up the most on average across the board. And then the next one, the low threat, we were nearly spot on in terms of the average of because there was 44 stocks. So it would have been like 7 to 10 each or something like that on the old list. Because this scrolls down, by the way. It just doesn't on this slide though. And then it was, but we were pretty bang on. As you can see, the ones that are like, there's a couple of that have bounced out, like was it Z? Is that the one on like DocuSign and Path, and but there's a few that that have just been annihilated.
DocuSign, I'm so bearish on DocuSign. I don't. This might be from user experience, but a little bit of an ego. I
cannot be shorter. If I had two short, HubSpot and DocuSign gone.
Oh my goodness. Like DocuSign, it's just the pricing model is incredible incredibly crazy because you can go from an individual enterprise license, which is about, I think it was like $60 or something, was it?
Yeah, it was $60.
It was
60 a month.
50 a month for 100 envelopes. But then
That's right,
if you want the next 100 envelopes, it's like 700.
Oh yeah, it was. Well, it was like basically you have to triple the price of per month subscription, and you have to have a minimum of 3 members in that group, and that was the only choice. And I was like, this is crazy. Like, how can you go 9x on your previous tier?
And then 5 minutes later, you found a free one, and we were like, See ya.
Yeah, yeah, and there's no moat. Like, I just don't
Yeah,
get it.
no,
Like,
that's crazy. I mean,
it's just
I
nuts.
think they were the industry standard, and I think there's certain, like, they do have like really ratcheted high, like, yeah. But I mean, at the end of the day, it's not
The open source one. The open source one we found was, I mean, like, obviously it's not. It hasn't got the bells and whistles. It doesn't look as nice, but functionality wise, oh my god! If you just had a team developing that out, it could be better than DocuSign. You know, so yeah. Oh my god! I don't like DocuSign.
Xero's still kind of struggling a little bit, but I mean that probably doesn't include, because we did this map at the start of the week, and we saw obviously the Aussie stocks, they've done a fair bit better. I'm really surprised at Vive, and
yeah, that's been disappointing.
It has been, but it could. I mean, I'm actually pretty surprised about Atlassian, because it was looking grim, and it's come back pretty hard. And then Snowflake kind of out of nowhere. So I'm assuming that, so this is like the dots are years. And if you've got, what is it, 6 green dots, that more dashes, then that means you're going to benefit. And then if it's 6 dash, and then as the threat elevates, obviously, as the years go on, because some of them will maintain their moat for a period, and then they won't. So, and I think ServiceNow's done a lot better than I thought. Like, I think this is still a bit of a living document. There's a few that I would say, I think ServiceNow has proven that it's probably needs to come up the list, because it's going to be a deployer, and I think it kind of has come up the list a bit there. It's the one that's next to CrowdStrike, but in the blue. And I think it was a little bit lower potentially. But then like SiteMinder is like moderately low. Like, the tech is, the moat is basically zero for that. But it kind of but similar to Xero, it's a lot of small businesses use it who are highly unlikely to ever code it themselves. Not everyone has a K.AI, is what I'm saying.
For these SaaS companies that, and we'll leave it a lot more detailed explanation for the webinar, but I think, there's still, when you treat it as a business case, like say Xero, you go from a tech standpoint, sure, like, it's, you can replicate Xero. It's not crazy difficult software, but it's the use case and also the accuracy of it, right? Because, like, for example, Xero, like, sure, you can build the AI, but what if it's inaccurate? You can't lodge a tax return that is 90% correct. That's not how it works.
And you don't want a robotic surgeon that's like an 80% shot at like your heart surgery. But it was interesting. The doctor, and shout out to John, one of my doctor clients up in Gosford. He's saying that they're using AI a lot in X-rays, radiation imaging and stuff now. But more of a but they still, he said, it's more so they don't miss something. It's more so a backstop, I believe. And you're not, I guess you sort of lent towards, it takes a fair bit of pressure off, because they're not like super easy to read, some of these things. So it at least gets you in the ballpark or something, or thereabouts. But like PMA's been done really well as well. And we were hammering. Young Finn likes the look of Autodesk, but the heat map doesn't. So look, we're gonna have some picks, because there's some laggards. It all hasn't gone up in one linear fashion, but I think the cybersecurity space has proven that once everyone gets over that AI is not going to solve that, it's not going to mow their lawn and and do everything. That once that worry, that Mythos really did, ironically Mythos did that. Everyone's gone, oh God, we're going to need way more cybersecurity because Mythos is going to hack me. But I think it'll just be, I think subcategories will just get catalysts over time, and we'll go back to being normal, because there's some pretty good businesses there. and software is not just the only thing that's there. Anyone who has a business producing economic calendars will be out of business because even I automated this. But we do have employment tonight, CPI, which will be potentially very dangerous. Oracle and Adobe, two companies that, like on a historical basis, never failed to disappoint. But I think Oracle might go okay, actually. Because of all of that sector's done it sits between cloud software and actual physical data center. It does a bit of both, right, Kai?
So Oracle does a lot of infrastructure. Most of it is infrastructure now. So they're pretty big on the data centers. They've got tons of those racks in these massive data centers. So yeah, they've got capacity. That's really where they're gearing their model towards cloud service
and cloud as well. Yeah.
Yeah.
So that I haven't looked at a chart, but they've been the stocks that have run. Stay tuned, people. We may have a new recommendation for you out of that one. I didn't think about that. And yeah, look, Kai, you're equal first now. JT's moved up the ladder. But I haven't collected your votes today, gentlemen. But we're all here. I am definitely bearish.
I'm bearish as well for next week. Yeah. It's the same. Oh, there you go.
No, so that, Kai, you bullish or you bearish? That's not your vote. That just accidentally I put that in there from last week.
Justify.
I couldn't hear you, mate. So you have to talk into the microphone.
No, I said I couldn't justify a bullish. I'd have to go bearish.
Oh, the three bears again.
The three bears again. We're not traditionally been great.
We've never got a consensus and got it right. Have we ever got one?
No, we got one. We got one. Mate, we're literally on a 10-week win streak.
And I keep going bearish.
And JT cracked first, which is very, very rare. And you cracked second, and I've just learned that I should do the opposite to what I think when I'm really bearish. Inflation and employment are massive dangers, and there's no earnings to save them. And I did some stats on streaks. So we had a 9-day win streak inside a 9-week win streak. The S&P's got to be up 0.1 to be up for the week tonight. So that'll be it's net that it's only got so much data, but I don't think it goes back to like the 20s or anything. But I'm pretty sure it goes back at least 40 years. The data that in the model that I'm using. It couldn't find an occurrence of that sort of consecutive streak. So tell me, tell me that the algos aren't running the game. Sorry, that's right. Like and subscribe. You should definitely subscribe to the podcast. You should definitely scan that QR code and sign up for the webinar, which has been we're getting a lot of registrations for. It'll be on demand after as well, but you've got to register to get the on demand. And come and get some of K.AI's further wisdom on Tuesday, and it'll be around about 11 o'clock. And we will, and then we are considering doing one on space at some stage. But Kai's just got to finish that book. And getting space nerd on. We might even get him an astronaut's outfit for that one. But boys, thank you very much. And
thanks for listening.
We'll speak to everyone next week.